So when we look outside of the condo market and just get into the overarching or the overall real estate market, we look at British Columbia, Alberta. It doesn't really matter where we go across Canada. What's interesting about it is that we're seeing an increase in listings, significant increase in listings, really right across the board. There is few cities or provinces that isn't seeing an increase in listings, including British Columbia, by the way. And what's interesting about all of that is that there's a lot of listings out there. So there's a lot of sellers and there's not too many buyers. And I think the reason there's not too many buyers is JG, prices aren't off. As a matter of fact, when you look, Halifax is down a little bit. And if I'll just show this chart here, you start to see is that Vancouver is flat. Canada overall is down like less than 1% on a national average, not that we care about it. But when you look across the board, Hamilton, we look at London, Ottawa, they're up. So call it basically flat. I mean, they're up 1% kind of thing. But the point is that prices have not come off like many are anticipating, short of what's happening in the condo market in Toronto / the GTA. Everything else is kind of holding its own. Downtown Vancouver, the condo market is softening a little bit, but ultimately prices aren't off yet. Any thoughts on that?
I've said from the get-go, there's a floor to how low the prices will go here. And that's been tested many times over the last 6 months. And this is just another one of those tests, Patrick. And you're absolutely right. And in fact, this chart, which these kinds of charts, you and I are not huge fans of them. And the reason is because they account for all property types. But if you dug into this chart and you looked at, for example, the price of single family duplexes or triplexes, they would be up significantly because those revenue generating assets are actually worth more. The reason is because when you can use that income to qualify, like in the self-funding house initiative that you guys are doing, Patrick, which I'm sure we'll talk about at some point, that revenue counts towards affording a property. As a result, there's a premium to those properties, and we're seeing those properties appreciate in price. So if somebody's sitting there thinking, oh, I can't wait for that triplex to go down in price, I think you're going to be waiting a very long time. And I think you're going to be kicking yourself in the ass very soon because you're going to say, shoot, I missed my chance. Interest rates are on the way back down because they're going to do a half-point drop here later this month, as I predicted, Patrick. Half-point drop is what my prediction is on Bank of Canada. And I think that is what's going to spur the market. I think that's why my personal opinion is there's a ton of pent-up demand in this market. And that's why the Bank of Canada is going to hang on as long as they can, but they can't hang on forever. At some point, they're going to have to cut interest rates. And when they do, that pent-up demand is just going to springboard that real estate market. And I think a lot of property values are going to benefit from that. That's where I think it's going in the next little while.
Well, we know there's motivated vendors out there. There's people that want to get out of the real estate market, but there's not enough that the vendors aren't motivated enough that they're willing to drop their prices. Buyers are not willing to pay the price. So it's a little bit of a standoff, I guess you might say, is what is starting to shape up.
That's because, Patrick, also started to jump in there, but that's because, like, I was talking to one particular client right now. We're putting in a basement suite in her home to make it an income property. Smart move, by the way. You guys should look into this. But the reason we're doing this is so that she can qualify. And the reason we're doing this is because she can see the future and she understands, okay, I see what's coming. My mortgage renews in 2 years and I need to be in a better position in 2 years from now. And Patrick, so far, the market hasn't had that much pressure. But in the next 2 years, essentially almost all mortgages will have turned over. Then it'll be a different game because right now people have the luxury of saying, I'm in a really good mortgage position and I'm just going to wait. I'm just going to wait it out. I like my 1.8% mortgage rate. I'm just going to wait. I don't need to move right now. But eventually they won't have a choice because they will get automatically renewed to the newer rates. And then they're going to have to make some new decisions. And I think that's all going to happen in the next 1 to 2 years. And then that's going to naturally force some of this market to come back to life. By then, I also expect interest rates to come back down.
Let's go talk a little bit about economy and interest rates and the importance of what the Bank of Canada may or may not do in July. You're saying a half, I'm thinking a quarter. They may hold. I mean, they may not do anything, let's face it. But there's a fundamental and of course, it's hard to trust the Bank of Canada. They made so many mistakes early on, and I keep going back to the day that Tiff Macklem looks into the camera and goes, we're not even thinking about raising rates, and where, it's go out and spend, borrow, and then didn't have the, I guess, foresight to kind of shut that down far earlier. Lots of politics around that. But let's just talk about that for a second. Here's the fundamental issue that we're going to bump into. We talk about lag. So as you pointed out, and we talked about many times on the show, is that interest rates and the lag and the effect of the lag of what's happening economically is a big deal. Great headline was around Canadian households are going to be reducing consumption. Now, why is that important for us to pay attention to? If the Bank of Canada doesn't decrease rates in some way that people can feel confident, what's going to happen? If your mortgage payment, let's say your mortgage payment, I mean, gosh, there's lots of $1 million mortgages out there, especially in Ontario and British Columbia, but even 800,000. And all of a sudden, over the next couple of years, that your mortgage payment's going to go up $1,000, $2,000, $3,000. Guess what? People are going to quit spending discretionary income because they don't have any left over. It's making a mortgage payment. So here's the fundamental, is that if they don't lower the rate, people are going to stop spending money, which is in fact going to decrease demand, which is in fact going to slow the economy even further. All to say is that this lag is just now hitting, and it's why what the doom and gloom part of me isn't all about doom. It is a little gloom, because I think we're going to see that slow down catch up to us, and they're not going to lower rates fast enough, and we're going to go through the discomfort of a more definitive discretionary or definitive recessionary period.
I think you're right about that, Patrick, because if you can always count on the Bank of Canada for something, is they do too little too early and too much too late. That's a guarantee, because they can't time the market perfectly. And you're seeing that literally in play with this recession, which is they did too little too early, meaning they waited, bang, they raised it way too high too fast. And now they're going to wait, and they're going to wait, and they're going to wait. And I'm hoping for a half-point drop in July. You're hoping for a quarter-point drop, but I would not be surprised if they did something as stupid as raising interest rates, because they're going to wait and wait and wait until it's too late. Then they're going to cut aggressively, but the pain will already be felt by people. It's a guaranteed to happen.
So let me go back to what you call as doom and gloom. Here's the kind of, let's connect some dots for people, why that might even land this way. First and foremost, we know that our productivity GDP is record lows. In other words, we're just not producing goods. Short of Alberta in their manufacturing, and their productivity is off the charts, and we see that what's happening in that economy. By the way, though, Alberta's unemployment rate has really changed. It's shifted way up. It's like in Calgary, I want to say it's 8%. Again, based on the fact that they have all these people moving into the province, and they just can't absorb all those people in terms of jobs. Having said all of that, when we look at the fact that our GDP, our actual true GDP in terms of productivity, is at record lows. When we look at the fact that the housing market is slowing down, and the reality is that much of our economy was driven by housing. What have we got left that's been driving the economy? Immigration. Well, now they're talking about, I don't think they're going to do it as much as they say they're going to, is cutting back on immigration. So if you look at that, then you consider the fact that interest rates are not coming down fast enough. The spread of mortgage payments, rent payments, for example, then you start to see people's discretionary income is going to be going to paying rent, going to pay mortgage costs. Things are going to slow down, JG. And that's why I'm kind of looking into the future going, this isn't going to be good over the next 12 months. I think there's going to be a lot of pain felt, and some discomfort for many people given the scenario that's happening. And something I want to point out as well, the CPI data comes out, and I don't know how much you pay attention to it, But if you take off the cost of shelter, and even if you don't go that far, if you just take out the cost of the mortgage interest payment, which goes into CPI, do you know what the actual CPI rate is, JG?
What is it? I'm fascinated now.
1.6%. So we're hitting CPI numbers. The economy's cooled off. Things have slowed down given this benchmark CPI number. Whatever you think about it doesn't matter. It's literally, if you take off that interest mortgage, the interest payment or the interest portion of a mortgage payment, your CPI and shelter cost, your CPI drops to 1.6%. Why aren't they lowering rates dramatically?
It would be the smart thing to do is for them to lower rates in a couple weeks by half point. We both agree on that. But we'll see how smart they really are, Patrick. I mean, this is it's definitely a good test, and we'll see. What are the economists saying, by the way? You follow way more economists than I do. What are the economists saying? What do they think is the consensus of what they're going to do?
Dude, this is, we're as good as any economist out there, because I can tell you right now, if you were to poll 10 economists, you would get probably a split of what they're going to do. There is no method to the madness. Everybody, you may as well just throw a dart against the board if you're trying to figure out what the Bank of Canada is going to do. I don't even think they know what they're going to do, but that's a different conversation. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.